This advert was brought to you by the Securities and Exchange Commission, the regulators of capital.
Mommy, guess what? I want to be a doctor or a pilot or an accountant.
You want to be an accountant or a doctor? But all those things cost a lot of money, baby.
Actually, Mom, my teacher said that the Zambian capital markets offer us an opportunity to invest in long-term financial products, like stocks, bonds, and collective investment schemes.
Yeah. You see, Mommy? You see? So, if you start to save and invest some of my pocket money now, you can help me be anything I want to be.
Vanavanga, that's why we sent you to school, ka? So, Sunny, tell me, where can I get more information on this?
Well, if you would like more information about investing in the capital markets, you have to get professional advice from a stockbroker, dealer, or investment advisor that's licensed by the Securities.
Good morning, everyone. Thank you for joining us and welcome to the Virtual Exhibition for the World Investor Week. It's a two-day exhibition. We're going to learn about capital markets. And the theme for this year's World Investor Week is a smart investor through capital markets. I'd like to welcome everybody that has joined us on time. And we'll just give it a few more minutes, just maybe 5 minutes or less, so that we can get other people to join us as well. Thank you.
Good morning, everyone. We are extremely delighted to be hosting this event this morning. And perhaps as we wait for others to join, if you could kindly rename your profiles so that we can see which institution, or if it's not from an institution, we'll then just understand that you are attending in your own stead, but it would be nice to just have a sense of who's represented here. And then also, if you can text or in the chat, you can just provide details to the hosts in the event that you don't want your details to be broadcast to everybody else. If you can just send that to the host so that we can share additional material after this. Thank you.
Good morning once again, and welcome to today's virtual exhibition on capital markets. So this week we're celebrating the World Investor Week under the theme is Smart Investor through Capital Markets. So this exhibition of the World Investor Week is commemorated with under the supervision of the IOSCO, who we are members of. The Securities and Exchange Commission is a member of IOSCO. And I'll now invite our Director of Market Supervision and Development, Ms. Mundia, to give us some opening remarks. As you can see from my screen, this is the program that we have for today. So we'll have the introduction, the welcoming remarks by Ms. Mundia, after which we're going to have a presentation on introduction to capital markets. This will be done by Mrs. Leah Simasiko. After that, we're going to be joined by the stockbrokers of Zambia, Maxime Hala, will take us through investment basics from the broker's perspective. After that, we're going to be taken to a trading day at the Luce. This will be done by Lina Lungu from Luce. After that, we're going to have a presentation on fraud and scams, which is one of the major topics that we have for this week as we commemorate World Investor Week. This will be done by Mrs. Dingase Makumba from the SEC. I'd like you to all enjoy the program. And as mentioned earlier, kindly rename your profile so that you name the institution that you are coming from or that you're representing. And also indicate your details. I know you did registration already, but just in case, you can indicate your details like your phone numbers and email in the chat directly to me, and we'll take note. Thank you for joining us. Ms. Mundia, over to you.
I already said my good mornings. Maybe just to say another good morning for those who went already. Sorry, I think we have a bit of a bit there on the connectivity. So we are very excited, as I mentioned earlier, to have to host this important event. And ordinarily, if it were not for still taking safeguards on the COVID front, we would have been meeting somewhere, but perhaps sometimes just as well, so we can have as many people be able to participate in these events. This week is a very important week for not only in Zambia in terms of capital markets sensitization, but just globally. It's a week that is celebrated globally, as Sitali had indicated. Zambia capital markets, or the Securities and Exchange Commission, the regulator, belongs to a bigger family of regulators, a global family, which is called the International Organization of Securities Commissions. It's a world standard setter, and similar to other professions like, say, accounting, you've got standard bodies or global bodies that will set the standards and just ensure that there is certain agreed themes and best practices that, if adopted, would indicate that you are matching up with the expectations from a governance perspective. So it's the same with the securities markets. There are certain standards that have been set, and adoption of those principles, they are called the IOSCO principles, indicates that this market is serious and that it can be trusted with funds from anywhere. And so we are basically part of that institution, and some of the things, the initiatives that you see taking place on the ground, they're basically intended for us to dress up and match up to these standards so that we can attract capital to the Zambian capital markets. I think as part of the opening remarks, I thought I really emphasize this point that any market is in competition with other markets. So the Zambian capital markets is in competition with the Botswana capital market. It's in competition, whether it likes it or not, with the South African capital markets, the Kenyan capital markets, the American capital markets. And when we say competition, we don't mean just the unhealthy type of competition. But in basic terms, we are saying we're all competing for this capital. So we're competing for the investor who's based in America to bring resources, their investments to Zambia. We are competing for that investor who is in the UK to bring investments to Zambia. And basically, we are competing for our own investors in this jurisdiction to make sure that the money doesn't leave Zambia. And to do that, you need to set up yourselves in such a way that you instill confidence. So some of the things that we do, like licensing, registration of securities that eventually end up on the Lusaka Stock Exchange, enforcement actions. When you hear the regulator has placed an institution under possession, for example, all those things are basically aimed at instilling this market confidence that is eventually intended to grow the markets so that the markets are trusted and you are safe with investing in these Zambian capital markets. Today, we want to share various things. We want to bring you into our world, and we have lined up a lot of players who will be talking to you to explain what they do. And basically, the information that we're going to focus on is information that makes you a smart investor. And what we are saying this year is that the first port of call for safety in any capital market is yourself. And an informed investor is a smart investor. So we want to give you this information that will enable you to understand how the Zambian capital markets work. And we hope that this is just a start of this information. And I know we've been sharing, we've had prior events. So this is just a continuation of providing you with this information that we believe empowers you in a sense that it enables you to take safeguards and make informed decisions so that you are not subject to frauds. Frauds, I must state, is an issue of concern, not just to the Securities and Exchange Commission. You probably saw us last year with the central bank, with the pensions and insurance, where we joined forces to do messaging against fraud and scams of the financial nature. So it is a matter that we recognize is a challenge, but also what we are saying is it cannot be expected that the regulators, the three financial sector regulators, can catch up with every fraudster that's out there. There's now technology, and from last year, this technology has been taken to another level. So it's practically impossible for the financial sector regulators to cope with the number of scams that are being set up on a daily basis. So our bet is empowering investors with the information, with the tips, and also just them knowing what is legitimate products, what sort of products are available legitimately, who is licensed, who is authorized to sell, where can they get that information? So we hope we'll provide clarity on some of those fronts, and please engage with us. We intend this event to be a two-way platform where you literally also reach out to us, and let's have the construction dialogue as we position the Zambia capital markets to be the preferred destination for investments, whether it's local or it's foreign investments. We want the Zambian capital markets to take a different direction going forward. I'd like to leave my opening remarks there and just invite you to enjoy yourselves and to participate for the rest of the event. Thank you. Sitali?
Okay, thank you so much, Ms. Mundia, for that. We'll get into our first presentation for the day. This will be done by Mrs. Leah Simasiku. She's the Surveillance Officer of the Securities and Exchange Commission. But before I invite Leah, I'll just mention that after her presentation, I'd like you all to turn on your cameras so that we can take a group photo. So kindly prepare yourselves. Okay. Leah, over to you.
Thank you very much, Sitali, and good morning, everyone. Thank you so much for joining us today. We're excited to have you on this platform. So I'll kickstart the series of presentations that the team has prepared. And my presentation today is mainly looking at giving an overview of the Zambian capital markets. Next slide, please. Sitali, can you both confirm if you can hear me clearly?
Yes, we can.
Okay, great. Thanks. Okay, you can move to the next slide. Okay, so that is my presentation outline for today. So part one, we're going to be looking at the Securities and Exchange Commission, just to get a deep dive or an understanding of who we are and what we do. Then part two, we're going to look at the overview of capital markets, and in particular, looking at the context of our own capital markets here in Zambia. Part three of the presentation is going to look at the products that are found in our capital markets here in Zambia. And the last part is where we can get to interact and get to attend to whatever questions that you're going to have. So as I go along in the presentation, should you have any questions that you would want to ask, you can drop them in the chat so that you don't forget them. And when we get to the question and answer session, then we'll be able to attend to them. Thank you. Next slide, please. So to start off, who exactly is the Securities and Exchange Commission? So the Securities and Exchange Commission, which is commonly referred to as the SEC or the SEC, is the regulator of capital markets in Zambia. So it is charged with the major responsibility to regulate and promote capital market development in Zambia. Where does it get its powers to regulate capital markets? So the powers for the Commission to regulate capital market are vested or were established through an Act of Parliament, which is the Securities Act, Cap 354 of the laws of Zambia, which has since been repealed, and its existence has been continued under the Securities Act number 41 of 2016. So the Securities and Exchange Commission plays a critical role in the economy by facilitating the mobilization and allocation of capital resources to finance long-term productive investments. So as I go deeper into the presentation, I'll be able to unravel more about this point. Ms. Mundia also, I think, mentioned in her opening remarks that we are a member of the IOSCO, which is the International Organization of Securities Commissions. Next slide, please. So what does the reporting structure of the SEC look like? So this is the reporting structure of the Securities and Exchange Commission. So we fall under the Ministry of Finance, where we have the commissioners who may be considered as the board members, where they are appointed to come and sit on the commission's board and oversee the functions of the commission. At the bottom there, we have the Secretariat, which composes of management and staff of the Commission who are responsible for the day-to-day operations of the Commission. Next slide, please. So what is the mandate of the Securities and Exchange Commission? As I indicated earlier, our main mandate, we do have a dual mandate, which is to look at the regulation and supervision of the market. And on the other side, we also look at market development. So under market regulation and supervision, some of the things that the Commission does is to ensure that all capital market operators that operate in the capital market space are licensed. All securities that you find in capital markets are either registered or authorized by the Commission. And also there are various tools that the Commission will use to supervise the market. We can start off by looking at inspections. So the Commission will conduct inspections to check on the operations of our various capital market operators in the market. We also conduct surveillance activities just to monitor what is happening in the market. We also ensure or monitor compliance by our various capital market operators who have a number of continuing obligations which they need to adhere to. So we monitor compliance to ensure that our capital market operators are compliant with the provisions in the Act. Then we also attend to complaints that may come from the market or from members of the public. So should you have a complaint that you need to be addressed, you can come through to the Commission and we'll be able to assist you or attend to you to ensure that your complaint is handled. We do encourage that if you have a complaint against a capital market operator, you first start off by lodging that complaint with them and ensure that you've exhausted all the required steps. And should you feel that you have not been attended fully, or you still feel that you need certain matters to be addressed which they have not managed to address, then you can come to the Commission and then we'll be able to assist you. So we also conduct market analysis and investigations as some of the tools that we use to supervise the markets. So on the flip side of the coin, we also have the mandate to foster market development. And some of the activities that we do under this pillar is some financial inclusion. So to ensure that we come up with programs, initiatives, or activities that help to improve the financial inclusion of members of the public. We also conduct financial education awareness campaigns and sensitization just to help members of the public to learn more about capital markets and the products that lie therein. We also have various competitions and challenges that are rolled out to schools, colleges, universities, etc. We also promote and support product development that through various capital market operators that may come up with certain ideas, and also conduct research to help with the same. Next slide, please. So our vision as the SEC is to be a capital markets regulator that offers a conducive market environment for raising long-term capital needed for a thriving economy. Our mission is to stimulate the expansion and growth of the capital markets in order to make a sustainable and significant contribution to the economic development of Zambia. Next slide, please. So what are some of the SEC objectives? So our key objectives are, number one, investor protection. So everything that the Commission does, it's tailored towards ensuring that investors in the market are protected. And this is done through a number of activities that the Commission does, and ensuring that the capital market players are compliant with the requirement of the Securities Act and a number of other legal acts or requirements that are in the market. So for example, we ensure that there's compliance with the Securities Act, including the Code of Conduct, rules, takeover measures rules, advertisement rules, etc. We also want to ensure that our market players are also compliant with other acts such as the Companies Act. We also do have a compensation fund in place that is tailored towards ensuring that should an investor suffer loss, there is some level of compensation that they would be given in order to cover that loss. There are also the listing rules. These are by the Lusaka Securities Exchange, including the Code of Conduct rules and the Code of Corporate Governance. Another pillar that we look at under our objectives is to ensure that there is fairness, efficiency, and transparency in the markets. And what do we mean when we say this? So ensuring that there is equal access to information. So we strive to ensure that there is information symmetry in the market. Ensure that members of the public receive or have access to information equitably and timely. Also, we want to ensure that there is efficacy of price setting mechanism and extent of liquidity. Also ensure that there is mandatory disclosure requirements to help fraud prevention strategy and fairness enhancement strategies. Then the other pillar that we look at is systemic risk reduction. So under this pillar, we monitor market players within the market to ensure that any failures are detected promptly and their impact is addressed so that it can be limited. We also ensure that all market players are licensed within the market to prevent undesirable actions and ensuring that there is an adapting regulation for the market or for the market operators to be able to operate in. Next slide, please. Next slide. So who do we regulate? So this slide just gives us a snapshot to see who we are referring to when we talk about capital market operators. So they've been put in 3 categories. So we have the issuers, and under this segment, you find the listed companies, quoted companies, other issuers, and depository receipts. So the listed and quoted companies, these are the companies that trade on the Lusaka Securities Exchange. So those companies and other issuers are also regulated by the Securities and Exchange Commission. Then we also have the licensees, or also known as the intermediaries. So under this segment, we have securities exchanges. So for example, the Lusaka Securities Exchange is regulated by the SEC. We have various stockbrokers, dealers and representatives, investment advisors and their representatives, as well as the Central Securities Depository. So all these licensees are also regulated by the SEC. The last segment there is the collective investment schemes, under which we find the fund managers who are currently managing over 34 funds. We have 2 custodians and 1 trustee who are all regulated by the SEC. Next slide, please. So part 2, now we get to look at capital markets. So what exactly are these capital markets? Or what do we mean when we talk of capital markets? So first and foremost, when you hear the word market, what comes to mind? When you go to, let's say, Soweto market, you will find a number of people that are selling and a number of people that are buying products. So a marketplace, we can say, is a place where people will go to sell their products, and people will also go and buy the various products that they need from the people that are selling the products. So when we bring in the context of capital markets, so bearing in mind this image that we have at the back of our minds of a marketplace where people have gone to buy products, we can also bring it along even as we think about capital markets. The only difference is that you'll not really walk into a physical marketplace, but instead this physical marketplace will be replaced by a platform. So capital markets provide this platform where companies or entities who would like to raise long-term capital can come through, and they are then met, or they are then paired with people that have got savings or investments which they would like to make, and they also bring this to the market. So investors will put in money and say, look, I have this investment to make. So through the different capital market agents, you can place your savings or your investments. And then the entities that need this capital or need this long-term capital will have access to it. And this can be through various capital market products such as bonds or equities, which are also known as shares. So the capital markets are split into 2 markets. So we have the primary market, where we have the initial issuance of securities. So for example, if a company wants to come to the market and issue shares for the very first time, they're going to do this in the primary market through what is known as an initial public offering, which is an IPO. So because they are bringing these shares to the market for the very first time, this will be done in the primary market. And once they've issued the shares, so investors will come and buy these shares, And once the shares have been bought, you will not have another time when this company will come and issue the same number of shares to the market. So we also have the secondary market, where now you can have onward trading. So for example, if company X issued shares through an IPO for the very first time in the primary market, and myself as Leah, I bought shares in company X, the next time I might want to consider selling these shares, I will have to do this on the secondary market. This is where I'll now be able to float my shares and look for any other buyers that may want to buy these shares. So those are the two markets that you find in capital markets: the primary markets and the secondary markets. Next slide, please. So what does the capital market universe look like? So I spoke of the capital markets as being a platform. So as we look at this image, we imagine it to be this platform where investors and also companies looking to raise long-term finance will get to interact. So we have a number of agents or players in the capital markets that enable its functionality. So for example, when you look in the middle there, we have capital markets split into two, looking at debt markets and equity markets. And on the left side, you have the supply. So this supply, you can have the supply of shares or bonds. So this is basically the institutions or companies that are looking for capital. And on the other side, on the right side, where we are looking at demand for these shares or bonds, this is where you find either your domestic investors or international investors that are putting in their investments to enable these companies have access to this long-term finance. So as this is happening, there are a number of key players that create this enabling environment for this to take place. So for example, when you look at the top there, you see the enabling structures and functions. So there you will have capital market credit ratings, you have capital market research and analysis that happens, you have coordination of capital markets, you have the various capital market infrastructures such as the trading platform, which you'll find at the Lusaka Securities Exchange. You have various agents which will have capital market skills and capacities to enable or to create an
Yeah, we lost you. Can you hear me?
condition or environment. So you have.
Sorry, Leah, we lost you when you were talking about the skill sets.
Oh, okay. Are you able to hear me now?
Yes, you're breaking a bit, but yeah, maybe you can just go back to your point on the skill sets part.
Okay. So I was talking about so having various agents in the market that have capital market skills and capabilities to enable you to be able to access these products and also make your investments in the capital markets. We also have various capital markets
Yeah, we've lost you again.
which have been put in place to ensure that the market operates in a certain way.
Yeah.
And
we lost you again. Could you go back a bit again?
On the instruments part, and I think it's very important because your example is just basically showing two instruments, and I think it's important to make the point at this juncture that there are more capital markets instruments, there are more products, you've got collective investment schemes. We're currently talking of a new product, well, not really new, but one that's been included in the new Securities Act, private equity and venture capital funds. We are talking of new products like exchange traded funds as part of those instruments. Fintechs is another interesting one, and I think you just needed to make that point on the capital markets instruments, that there are more than the two that are showing on the diagram.
Yeah,
I think we're struggling on Leah's connectivity.
okay. Let me just get
Hello?
hold of Leah. Let's see. Leah, can you get
Hello?
us?
Can you hear me? Yes.
Did you get
Can you
what
hear me?
Leah said? We lost you.
No. Okay, sorry about that. So I've just had to change my network.
Okay.
Yeah. You can hear me clearly?
We can get you now. You can go back
Okay.
to
Right.
that.
Sorry about that. So yes, so I was also saying that when you look at the bottom part, there are rules that have been put in place to ensure that all these capital market operators operate in a certain regulated environment. So they have to adhere to the various rules and regulations that have been put in place. So some of these, you look at the capital markets legal framework, investor protection, capital markets regulations, you have corporate governance codes and criteria, you have the listing rules, as well as capital markets norms and standards. So the expectation is that the various capital market operators have to be compliant with these rules in order to operate within the capital markets. Next slide, please. Hello? Hello?
We can get you, Leah.
Yes, yeah, we can get
Okay.
you.
Okay, so this next slide just gives us a snapshot or a brief timeline of the key securities legislation that we have had so far. So in 1970, we had the first Stock Exchange Act that came into play. And in 1992, we saw the Privatization Act coming into play, where a number of state-owned entities were privatized. And following this, in 1993, we had the Securities Act, and the LUCE was also created in this year, on which most of these privatized entities were then registered and the securities were traded. In 1994, the LUCE began its operations, and they made a resolution to demutualize in 2015. In 2016, we saw the inaction of the new Securities Act, and currently we have about 23 entities or companies that are listed on the market. Next slide, please. Next slide, please. Okay, so this slide just shows us some of the companies that are listed on the Lusaka Securities Exchange. So some of these are entities that we know, that we have come across, that we have interacted with, we probably use their products, but maybe one or two may not have known that these are actually entities that are listed on the Lusaka Securities Exchange, and that you can even have an opportunity to be a shareholder in one of these companies. So we see a number of the banks. You have Zanaco there, you have Standard Chartered, you have Investrust Bank. We also have a number of other companies such as Zambif, Zambia Sugar. Most of us do get to buy beef from Zambif, sugar from Zambia Sugar. So these entities are also listed on the stock exchange. We have Zambian breweries, ShopRite, British American Tobacco, etc., etc. So these are some of the companies that access long-term financing or capital from capital markets and are currently listed on the Lusaka Securities Exchange. Next slide, please. So the next slide just shows us some of the amounts that have been raised as capital through our various instruments through our capital markets. So for example, at the top there in 2000, Farmers House issued a corporate bond and raised about $1.5 million. So at the bottom there, we have a number of companies and the years in which they issued these various instruments and the amounts that they were able to raise in dollar or kwacha terms to be able to finance their projects. Next slide, please. So now we move on to part 3, where we look at the different products that we can find in capital markets. And these are some of the products in which, should you be interested, you would be able to invest in and get to also take part and trade in capital markets. So we've got stocks, we've got bonds, we've got CISs, which are collective investment schemes, and other services. Next slide, please. So the first product that we're going to look at that is offered in our capital market is equity, or also known as stocks. So in the company that you wish to invest in. So if you decided to, let's say, buy shares in a company, that makes you a part owner of that company. You are able to buy stocks through any of the regulated stockbrokers on the market. So if you are interested in buying shares, you go and approach a broker and they'll be able to give you more information.
Leah, we've lost you again. Leah, can you get me?
Returns in 2 ways. So the first way is through capital appreciation.
Yeah, please go back a bit, where you were mentioning a broker to buy your shares. We lost you.
Okay, apologies for that. Okay, so I was saying that if you were interested in buying shares, you would have to go to a stockbroker who should be regulated or licensed by the Securities and Exchange Commission, and they would be able to assist you with all the information that you would need in order for you to get shares. So how can you benefit from owning shares? What sort of returns do you get as a shareholder? So there are 2 main returns that you can get. The first being capital appreciation. So capital appreciation is where, for example, if you buy shares in, let's say, Zafico, and the share price is 2 kwacha per share. So I buy shares today, it could be 1,000 shares at 2 kwacha each. Come a year or 2 from now, the share price for Zafico goes up, and let's say it's at 3 kwacha, and I decide to sell my shares. What will have happened is that I will be able to have this capital appreciation return, in that when I was buying the shares, I bought them at 2 kwacha each, but at the point I'm selling them, I am selling them at 3 kwacha each. So I'll have made a profit of 1 kwacha per share at the point I will be selling. But also do keep in mind that it's not always that the share price will just go up. There are instances where the share price can also go down. So those are some of the risks that you need to take into consideration as you make this informed decision to buy shares. Then also there's a dividend income. So every company, all these listed entities will have what we call an annual general meeting. So this general meeting, which they hold once every year, where they are able to present to all their shareholders the financial performance of that entity. And also the board can make a decision to issue dividends to all its shareholders. So you will be given part, or you'll be paid part of their profit through dividends to each of the shareholders if the board has decided in that year to issue a dividend. Bear in mind that the company will not issue dividends every given year. So sometimes they get to do this, sometimes they may not do that. So also as a holder of ordinary stock or as a shareholder, you are also then entitled to participate in voting at this annual general meeting. So if you're a shareholder, you own shares in this company, at the general meeting, you have the right to vote over some of the deliberations that will be happening at that meeting. So the entity you are invested in is also mandated to inform you and other investors of whatever information that may have the potential to affect the share price of your stock, and they are also required to make certain mandatory disclosures. So for example, they are required to publish their audited financial statements so that its shareholders and the public can have access to these and also just monitor their performance. There's also other information that they are required to share with the public, especially if this information has got the potential to affect the share price of the company. So that was the one set. Those were stocks and stocks on equity. So now we also look at another set of products which are offered in the market, and these are bonds. So what is a bond? So bonds are basically securities that represent a loan from an investor to an entity. So, for example, in the previous slide, I was talking about stocks and shares. A company can decide to say, okay, we'd like to raise capital, and they can make the decision to either issue shares or they can decide to issue a bond. So a bond is basically the company coming to the market and saying we would like to borrow a certain amount of money through this bond instrument, and then you as the investor will lend them the money by investing in this bond. So bonds can either be corporate bonds, which are bonds issued by an entity, or sovereign bonds, which are bonds issued by the government. So this so bonds are a fixed income security in that there is a certain amount of income that they will provide to you as an investor. So for example, if you are going to invest in a bond, there is what we call coupon payments, which are also known as interest payments, that will be paid to you as an investor, either annually or semi-annually. So that could be once or twice a year. And this is a fixed amount. So as you're investing in the bonds, it will be for a certain agreed tenure or maturity. So for example, it could be a 3-year bond, 5-year bond, 10 years, etc. And then there will be an agreement in place. So once or twice every year, you will be paid a coupon for interest payment. And at the maturity of this bond, at the end of the tenure of this bond, the company that had borrowed will then pay you your last coupon or interest payment together with the principal amount which you had initially invested in this bond. So you will have made your return from the coupon payments that you will have received during the tenure of this bond. So bonds can also be bought in the primary market, which is at issuance stage, and subsequently they are then traded in the secondary market. So for those that may be interested in investing in government bonds, you can visit your banks or even the Bank of Zambia to get assistance in order for you to make that investment. Next slide, please. Okay, so this is a pictorial that just gives you, which just shows. So in the first part there, you're looking at the bond origination. So this is done by the entity that is looking for the capital for the funds. So they will originate a bond, and by bond origination, we're talking about them then agreeing on the terms and conditions of this bond. So for example, they'll be looking at what coupon rate will they be able to offer to the investors, how long, which is the tenure of the bond, and etc. And number 2 there, you look at, that represents the investors now buying into or investing into this bond. Then number 3, the investor begins to receive the coupon payments. And in the 4th image, you see the company repaying the principal plus the last coupon payment. So this is just a pictorial to illustrate the explanation that I was just giving in the previous slide. Next slide, please. Another set of products that you can access in our capital markets are collective investment schemes, which are also known as mutual funds or unit trusts. So, what is a collective investment scheme? So this is a fund where or which pools in, capital or investments through units from different investors. So for example, I can explain it in the likelihood of a chilimba. So various people will come together. So it can be in your community, it can be in your neighborhood. You can decide and say, okay, 1, 2, 3, 4, 5 people, let us start a chilimba. So the idea is that the 5 of you will put monies together and give the one person, be it weekly, monthly, or daily for some. But once you've given that one person, they then have a bigger amount of money, which they can then use to either invest in a business or purchase something that they maybe wanted to purchase. So this pooling of funds will enable this person to be able to buy or invest in this business, because then they get to have a bigger amount at that one particular time. And the idea behind it is that it helps people, because then it is going to circulate around, and the next person, the next person, the next person will also receive similarly. So like a chilimba, the fund management companies pool funds from various investors, and once they've put these funds together, they then invest the funds on your behalf. So, for example, if let's say you wanted to invest in a real estate project and you only have 5,000 kwacha, probably the real estate developer will be like, look, this is not significant enough. But if a number of you, a group of you come together and put those funds together, you might end up raising maybe a 1 million kwacha. Real estate project. So the idea behind the collective investment schemes is basically to allow investors to indirectly invest in securities by investing in this particular scheme of funds, which is managed by a fund management company. So the aim is to benefit from the advantages that come with collective investment. For example, the ability to negotiate better rates and also spreading risks, etc. So this whole process is governed also by rules and systems. So there's a number of systems and rules which the Commission has put in place to ensure that this whole process is also regulated. So in the collective investment scheme universe, these are the main players that you're going to find. So you have the CIS, which is the actual funds, where the investors will then put in their money. And you have the manager on the left side. So the fund manager manages the funds on your behalf. And then there's also a trustee in place who represents the investors and your interest, to ensure that also the fund manager is acting in accordance to the rules and regulations that have been stipulated. We also have a custodian in place that holds the actual funds that you invest in this, the actual funds that you invest in this fund. So what am I trying to say when I talk about this custodian? So you have a situation where when you've invested these funds, they are not going to sit with the fund manager alone. So there are these other two that have been put in place to ensure that there are controls in place to ensure that the fund manager is operating in accordance to the rules and regulations, and that should anything happen to the fund manager, your funds are safe with the custodian. So this is just to bring you into the CIS universe. So this illustration just shows, when you look at the first part there, the pooling of funds together. So as everyone is putting their funds together, ultimately that piggy bank is going to be full. And once it is full, the fund managers will then get your funds and invest them in the different securities that are in the market. So for example, they can go and invest in bonds, they can invest in equity, which are shares, they can invest in property, and also hold it as cash and invest it in other cash instruments. So this is basically an illustration of what you'd expect to happen in the CIS universe. So currently, these are the funds that we have under management in Zambia. So we have about 10 unit trusts. That's Mpile, ABC, Madison, Kukula, Intermarket, Lawrence Poor, ECR, Altus, Hobbiton, and Longhorn. So this is just showing a snapshot as at December 2020 of, sorry, just go back. Yes, so it just shows a snapshot of the market share by assets under management for the different funds that we have. And this is a picture showing this as of December 2020. Next slide, please. So as we, as you are investing in this collective investment scheme, your investment is referred to as units. So you buy units into this fund, and you will buy them at a certain unit price. So this just is a quick illustration of how the unit price is derived. So first, we have the net asset value, which is the difference between the fund's assets and its liabilities. So when the fund manager is coming up with a unit price for the fund, these are the considerations he has to take into account. So he first has to come up with a net asset value. So he will get the total assets under that fund, and subtract the total liabilities, and that ultimately gives him the net asset value. And once you have this net asset value, you then divide it by the number of units that fund has, and this ultimately gives you a unit price. So each of the funds have got their own unit prices. So you can interact with them if you are interested to make an investment and get to find out how much you would need to buy a unit in that particular collective investment scheme. Next slide, please. So some of the other services that are within the capital markets. Number one, we look at broker and dealer services. So I spoke about in case you want to buy shares, you would have to go and see a stockbroker. So these brokers and dealers provide services that support investors by assisting them to deal in securities. So you have these entities and people that are in place to help you participate in capital markets. They also assist the firms that are looking to raise capital and other corporate financing needs. So this is the link between you, the investor, and the firm that is looking for the long-term capital. We also have investment advisors that provide investment advice to potential retail investors. So for example, if I'm looking for advice on what sort of investments I can make or what sort of securities I can invest in capital markets, you want to go and talk to a licensed investment advisor. Please take note, as a smart investor, you only want to deal with licensed institutions and people. Then we also have the fund management services, who provide fund management services on behalf of various entities such as fund managers, gratuity funds, etc. Next slide, please. So as we have spoken about all this, I know a number of us might be interested in making investments. Please caution, beware of scams and fraudulent schemes. There has been a rise in the number of scams and fraudulent schemes within financial markets, and we always urge that investors must be aware of this. I think it had indicated there's a whole presentation that has been dedicated to look at this. So stay tuned so that you can also learn more about these scams and fraudulent schemes so that you can be a smart investor. Next slide, please. So this last slide, in conclusion, is just to look at some of the recent capital market developments that we have had in the market in the last couple of years. The first one is the risk-based supervision framework. So the Commission is actually undertaking a project that will see it transition from a compliance-based supervision framework to a risk-based supervision framework. So basically, this will ensure that
Leah, we've lost you. Leah, can you get me? Hello, Leah.
Was she almost done with the presentation then? Perhaps, how many more slides do we have? Because maybe I can just run the remaining slides.
We're done.
Okay, so perhaps what you wanted to speak to is just to highlight that, you know, as part of our mandate the dual mandate, remember, is supervision and promoting market development. So promoting market development in the sense that we are expected to put in place the regulatory frameworks that will then enable the market makers, the brokers, and the other players to innovate and introduce new markets on the market. So these are just examples of some of the key projects that we've been running as SEC, especially in the last 2 years. So risk-based supervision framework is currently developed, and we just finalized the pilots. It's very important. It's a very, very important framework. Like I said earlier, we do have international best practices that we aspire to match up to. So adopting risk-based supervision for any financial market, financial regulator, whether central bank, pensions and insurance, or capital markets like ourselves, is agenda number 1 now in terms of what's trending, or in fact, what's considered best practice. So the SEC has done this, and we have worked with support from the Toronto Centre of Canada. This framework will be launched in March, and what we hope to achieve from this is a better supervised capital market. Some of you have already asked on the chart on that front in terms of how efficient or how effective is the supervision currently. So this framework is intended to improve on how we do that, because we will now be focusing more on risk as opposed to in the past when it was compliance and just basically ticking or not even paying attention to risk. The Capital Markets Master Plan, a fantastic, fantastic game changer for the Zambian capital markets going forward. And again, there we retain services of a consultant under the financial sector deepening Africa. This plan is a national plan, and it's been spearheaded by the Ministry of Finance themselves. It's a roadmap for Zambia's vision of how the capital market should look like. And it's a 10-year plan. So again, what is contained in there is maybe put in summary what the vision is: position in Zambia as a preferred destination for investment, as I said earlier. And so there's a lot of developmental areas that have been included in the plan that are intended to address the existing shortcomings and existing impediments of why the capital markets has not developed. So some of the views that have been expressed in social media, some formally to the Commission, were incorporated in developing this master plan. Very, very consultative approach was done by independent people, and we await the approval and adoption of this master plan so that the rest of us can begin to run with the different responsibilities that have been assigned. The Green Bonds framework was put in place in 2019, Again, if you have paid attention to the New Dawn government, greening is a major agenda. So you can say that the commission was visionary by prioritizing putting in place this green bonds framework. What the framework has done is you can actually issue a green bond, which is you can come to the capital markets, list on the stock exchange, and raise green funds for your green project. There are rules, and the framework sets out what these rules are. And we won't go into details because that's another session on its own. I'm not sure whether it's part of the talks that will be held, but it's very, very important, especially now that you have a ministry that is specializing on making sure Zambia is developing sustainably. We find ourselves in a very good place as capital markets. The FinTech regulatory sandbox framework, another game changer. There has been a lot of views expressed that the current capital markets as it sits, with just the main platform being the Lusaka Securities Exchange PLC, is not inclusive of all participants, or citizens, for example. So there has been the view that stock markets are blue chip, and they can only be accessed by certain circles or certain parts of community. So the fintechs now are a game changer to traditional platforms like stock exchanges. With the fintechs, you see new projects or innovations such as your crowdfunding platforms, your peer-to-peer lending platforms. And those are platforms where you will see more of SMEs participate and retailers participate. And we'll have the manager that's running with the regulatory sandbox, I'm sure, speak at some point during this virtual event. But this is just to tell you that we now have basically no excuse for not growing the Zambian capital markets. The frameworks are in place. The master plan itself, which embodies everything, is also in draft and final draft, actually just awaiting the Ministry of Finance to sort of process that going forward. So if all things go well, we do believe that we'll have the plan also approved before the end of this year. So I probably would like to end there. And I know there's a lot of questions that have been posed, and it's exactly what we wanted to do. We wanted to engage with you, the public, and so let's do that. Leah, I'm not sure if you're back, and just in case I missed out something that you wanted to emphasize, you probably want to do that right away.
No, thank you so much for concluding for me. I think you've adequately tackled the points, so thank you so much, and thank you everyone for your attention.
Sitali, back to you.
Okay, thank you so much, Leah, for that presentation, and Ms. Mundia also for making the conclusion. We'll go straight into our next presentation. This is going to come from Stockbroker Zambia. I know I mentioned we will take a group picture, but I think we can take it after Maxime, seeing as we've eaten some of her time. And we'll take the questions for this presentation by Leah as well as Maxime right after Maxime. So I'll allow Maxime to go through so that we do not take up too much time.
And just maybe, Maxime, as you come on, there were some questions that have been targeted specifically to the brokers. I would request that you perhaps try to answer them as you explain as you go through your presentation, if that's possible.
Yeah.
Right, good morning, and thank you for that. Tanya, I'm not sure if you're able to help me enable the screen.
I think you can share.
Just a moment, please.
Okay.
Right. Okay, all right, so this is my screen, and this is on the presentation of investment basics, particularly on the Lusaka Securities Exchange. So firstly, I just want to greet everybody. Thank you for joining us today, and also thank you for giving stockbrokers the opportunity to present at the World Investor Virtual Exhibition. So we're just going to go through what we'll discuss, which is on the contents. Just one, please.
Maxine, would you like to make your screen bigger in slide form so that we can?
Okay, can everybody see it?
Yes, perfect.
Thank you. Right, so we'll just look at who stockbrokers is, basically. We'll take a quick overview of the Zambian capital market, why you should invest in shares, and how you can begin investing, and also how to monitor your investment, and also how to contact Stockbrokers Zambia to begin investing. So we don't have much time for the presentation, so I'm just going to get straight into it. Right, so the question is stockbrokers at a glance. Who is stockbrokers? We are a licensed broker by the Securities and Exchange Commission, or SEC, and we are a dealer in securities and a founding broker member of the Lusaka Stock Exchange, now Lusaka Securities Exchange, the LUSE. Stockbrokers Zambia, or SBZ, is one of the leading brokers on the LUSE and offers primarily 3 investment services. So we do offer trading and brokerage services. This is basically where your investment basics would fall under in terms of you actually investing on the stock exchange. We do offer corporate advisory and investment banking. So this would fall under certain things like mergers, takeovers, and those kind of things. And ultimately, we offer investment advisory. So SBZ has 42% of the total market share in terms of equity trading. That's a representation of about 60,000 retail clients. We also provide investment advice to clients. We have updates, information on the listed companies, market trends, and we assist clients with the buying and selling of shares in order to structure and manage their investment portfolios, ultimately to suit their investment objectives. We have an unparalleled experience dealing with large and complex transactions, such as IPOs, which is initial public offering, rights offers, bond issuances, both in advisory and broker capacity. So we have acted as a lead broker for a number of the listed companies, one of which is Zanaco, whose IPO took place in 2008 with $40 million, and we act as a sponsoring broker for over 75% of the companies listed on the LUSE. Right, move on to the next slide. Right, so as an overview of the Zambian securities market, so the Zambian capital market ultimately is governed by the Securities Act, which is enforced by the Securities and Exchange Commission, the SEC. The SEC also gives out licenses to licensed dealers and is responsible for registration, regulation of issuers. The licensed dealers ultimately would fall under brokers such as ourselves. And under the brokers, we also have what we call dealers representatives, who basically are responsible for trading of shares, investment advisory, etc. So whoever is advising you under a broker should be licensed, and that's very important. Right, so brokers basically transact on the securities exchange, the Lusaka Securities Exchange. And as you can see, there's also a section for issuers, who basically sell shares to the investing public, and the investing public invest in shares of issuers. Last but not least, we've also got investment advisors who would fall under fund managers, ultimately who would assist the investing public to invest. In the previous slide by SEC, there was mention of a collective investment scheme, and so that would also fall under that. So ultimately, as an overview of the Zambian securities market, you have the regulatory side of things, under which the Act is implemented by the Securities Exchange Commission. You've got the primary market, And you've got the secondary market, which is where trading ultimately takes place. We'll move on to the next slide. All right, so the golden question, why invest in shares? Basically, when you buy shares in a company, you're effectively becoming a part owner of that company. So as a shareholder with an equity stake in that business, the investment return you earn depends on the success or failure of the company itself. So companies pay dividends to shareholders or may prefer to invest profits for future growth. Just to highlight that, basically, when you are investing in shares, you are taking your savings and making it an investment in the sense that you are seeking a return. So when you invest in shares, ultimately, you are looking at two ways of benefiting. One of the ways is through a capital gain, which is if you buy a share at a lower price and sell or liquidate it at a future date at a higher price, you earn a profit. The other way is through company dividend payments, which is part of a company's profit. And so you would then partake in that. So as a highlight, the benefits of investing in shares, firstly, is part ownership of a company. So you do become a shareholder in a company according to your percentage holding. So according to the number of shares you buy. You get real-time dealing throughout the trading day with limit orders available when markets are closed. Basically, this means that you get to trade through your broker on the stock exchange. You receive dividends either as income or reinvest to buy more shares. So the more shares ultimately that you own, the higher your dividend income would be. And depending on how large that shareholding is, some shareholders actually survive off dividend payments, but you would need to have quite a holding. However, in growing your investment, you can also reinvest your dividends to purchase more shares and ultimately increase your shareholding. Also, you do have the opportunity as a shareholder to vote on important company decisions, and this happens annually via the annual general meetings in which shareholders do have the right to vote when such incidences occur. Also, you do have extraordinary general meetings that happen every now and then, depending on what's happening in the company. You also have the opportunity to participate in a rights issue, and a rights issue is basically where a company tries to increase its, to raise capital by issuing out more shares on the market. So shareholders do get priority in participating in rights issues, and therefore ultimately you get to buy more shares at a reduced share price. And at the same token, you also get to benefit from bonus issues. A bonus issue more or less is where you get free shares given to you, and that happens every once in a while. We'll move on to the next slide. Sorry. Right, so the question, how do I begin investing on the Lusaka Stock Exchange? Well, first and foremost, you need to open your broker account. So we would encourage you first and foremost to complete the SBZ account opening form, which is also available on our website at www.sbz.com.zm, or you can email us directly at trading@sbz.com.zm to gain access to the form. It's quite a basic form, and it basically asks for your name, your contact details, your ID, your bank details, and basically getting an idea of who you are. This document is supported by other KYC, Know Your Client documents, which would be one, your certified proof of ID. We do have options, so you would have the option of submitting your NRC, your passport, driver's license, a voter's card, copy of which should be certified. We also request that you submit your proof of residence. There are quite a number of options that we give. Ultimately, proof of residence should be in your name. So the options that we give is a utility bill, a lease agreement, title agreement, bank statement. And if this is not in your name, then you do have the option of submitting an affidavit form or a letter from your employer just indicating where you live, your name and your ID, which should match the details on your proof of identity. So just in a nutshell, to open your stockbroker's account, you need to complete the account opening form, submit your proof of certified identity and your copy of your certified proof of residence. The account opening process is free, and once we verify your details, it can be instant. Given the COVID situation, we've moved more into electronic mail. So clients don't necessarily have to walk in with documents. You can email us your documentation. Right, so once this account opening process is done, we do encourage you to seek investment advice so that you, one, select the stocks you have an interest in purchasing. We do have broker recommendations, and we try to align your investment objectives with your investment horizon. Now, the investment objective is basically what you're trying to achieve as an investor. Are you here as a long-term investor, a short-term investor, or merely speculative? And so we compare what you're trying to achieve with the time frame in which you would like to achieve it. But given the Lusaka Stock Exchange, we do encourage investments to be long-term. Right, so once you have an understanding of the companies that are listed on the stock exchange, which industries they fall under, and which ones would suit why you'd like to invest, we do then help you select the companies, in which case you do need to make payment for the shares that you would like to purchase. So again, because of the COVID situation, we have moved more into deposits, bank deposits or transfers. We're trying to be cash free. That is to avoid handling physical cash. So we would then give you our bank details in which you would make payment. Now, the minimum investment amount at stockbrokers is 500 kwacha per company. The reason for this is firstly to cater for our minimum charge, which is 5 kwacha plus the Securities Exchange Commission charge as well as the LUCIS charge. Ultimately, the broker commission is 1.5% per transaction. So if you invest 1,000 kwacha, we charge you 1.5%, which is as good as 15 kwacha. And that 5 kwacha is taken care of. But the minimum amount per company per purchase is 500 kwacha, and the 1.5% would still be applied to that. So we do encourage you to diversify your investments, and that is to mitigate your risk, because the investment in shares in equity is actually the most volatile asset class in terms of the capital market. And so we would advise to invest in at least 3 to 4 companies to spread your risk, so that in the event, for example, that one company's share price does not go as you had hoped, which is higher, the other 3 would lift up the overall portfolio. So once you make payment, we request that the proof of it is sent to us by email so we can confirm that. The fourth step that we follow in the process of you investing in shares is that we request that you submit a written instruction. So you can either fill in our instruction form and send that to us by email, or if you do happen to be in the office, you can also sign that and submit it. Another form of written instruction that we receive is an email. So once you have made the payment, sent the proof of payment, you can follow that up in the same email, just indicating which stock you'd like to purchase and etc. And we would be able to act on that. We do encourage our clients to ensure that they receive their receipts for purchases made. This is also some client responsibility, because it is very important that you keep record of all of your purchases. Right, so once we have concluded your account opening, we have decided with you your ultimate decision on which stocks to purchase, and you've paid for your shares and written what shares to purchase. We then go ahead and place an order on the market. Now, when it comes to the actual trading, it's not a guarantee that if you pay for, say, for example, CC shares today, that you're going to have a seller to match your order. So what happens sometimes is that clients do pay for particular shares and they are placed on the market, and the broker either has to actively seek sellers in those stocks, or in some cases, those sellers do appear on the market. Right. Once your transaction is concluded, so once your shares are actually purchased on the stock exchange, you will receive what is called a contract note. Now, a contract note basically just gives indication of your details, whether it's a sale or purchase, the date of your transaction, which stock you're purchasing, the price, the volume, and the commissions. It is a legal document that is required to be sent to the client, and it basically shows proof that the transaction had happened. Now, just talking about that, once a trade takes place, it takes 3 days to settle, and that's according to the T+3 settlement cycle that we have on the LUCE. So contract notes ultimately will be sent to you on the settlement date. Right. So now that you've purchased the shares, you've opened your account, you've purchased the shares, you've received your contract note, you may want to ask the question, how do I monitor my investments on the LUCE? Right, so despite shares being a passive investment, active monitoring on the latest price movements and published information is key if you are to benefit from any opportunities in the market. To basically describe this or expand on this, it means that as an investor, if you purchase, say, 1,000 shares or 100 shares in Airtel during the IPO, and then 10 years later you come back and complain why you haven't received any benefit, it's more or less because of the fact that you haven't monitored your investment. It is key that you pay attention to information, because an informed investor is, of course, a smart investor. It helps you make informed decisions. It helps you see what's actually happening, how to maximize on opportunities, perhaps when to sell out and reinvest in another stock, and so forth. So, for example, CEC had declared a dividend recently, and the share price shot up from 1 kwacha 40 to now 1 kwacha 95. If you were not monitoring the market and the information available on the market, you could miss out on any capital gains, because basically the dividend that was declared, which was 37 ingwe, versus the share price at the date of declaration, if you include the dividends to the share price of 1 kwacha 40 and then 37 ingwe, you get 1 kwacha 77, but the share price is now 1 kwacha 95. So it's also an opportunity for you to realize capital gains. Right, so in order for you to monitor your investments, we encourage you to subscribe to the Stockbrokers Daily Market Update mailing list to receive daily market updates on market trading activities. We issue out a daily price sheet, which gives out the price movements, the bids and offers available in the market, as well as information concerning trading ratios, which is very important if you'd like to assess whether a stock if it's a good time to buy or sell on a stock, given the ratios. We also issue out the latest issued company information, such as dividend announcements or cautionary announcements, which are very important. Basically, for market to operate efficiently, information is key. So also read the local newspapers, such as the Daily Mail or Times of Zambia, in order to catch any latest company publications. Companies do publish their information, such as results or AGM notices. So it is important that you also keep abreast of that, aside from just being generally updated. Right, so frequently contact your broker to follow up and request for your investment portfolio. A number of clients do wonder why Stockbrokers doesn't actively send them their investment portfolios. Well, we manage 16,000 clients, and therefore you do need to take it upon yourself to take an interest in where your money is sitting and how the movement is going, whether it's a negative overall or positive overall. So there is need for you to take an interest in your own money as well. You can also visit the Stockbrokers Zambia and Lusair websites at www.sbz.com.zm and www.lusair.co.zm frequently to receive any latest updates. Both websites post the daily prices, so you would be able to keep abreast with what is happening. Stockbroker Zambia runs a weekly radio show every Monday morning between 7 a.m. and 7:30 a.m. It basically gives you a weekly market update on what happened in the previous week. And so that's also another way for you to keep abreast with what's happening on the stock exchange, and one way or the other to monitor your investment. So we'll move on to the last slide. Right, so in order for you to begin this journey, you do need to contact your broker, in which case the presentations will be made by Stockbroker Zambia. And so we welcome you to contact us. You can either email us at trading@sbz.com.zm. You can call us on the landline, which is 0211-232-456. I would say we're more efficient on the emails as opposed to the landline. You can also visit our website, www.sbz.com.zm. We do have a contact form there, and so if you wish to make contact with us via the website, that is possible, and we are responsive. Lastly, you can visit our offices at 32 Lubu Road, Long Acres, Lusaka. So this is the presentation that we have to offer you today. I was aware that there were some questions that were brought up.
Yes, Maxine, we do have a number of questions. Firstly, thank you for the presentation. It was very elaborate. Yeah, thank you so much. So we do have a number of questions in the chat. I'll try and run them through 3 at a time, hopefully so that we can get to them as quickly as possible. So some are directed to you, the broker, and some are for the SEC. So we have the SEC team. I know Leah is still here, and Ms. Mundia is here, and everybody else from SEC to answer the questions. So I'll take the first 3. I think I have comments and questions together. One of them from Clyde Muchindu says it would be great to get more insight on fintech options that are being considered. Then we have one from Estella saying, where can I get information on foreign participation in the stock market? And Sunil says, where can I find the listing rules? So maybe we can take the first 3 comments there, questions.
Okay, could you please repeat the first question?
Okay, the first one is more on fintech. I think this will be covered by Mubanga from the SEC. So what we can tackle is where they can get more information on foreign participation on the stock market and where they can find the listing rules.
Okay, all right, thank you so much. All right, so firstly, for the second question, where can you get information on the foreign participation on the stock exchange? Well, the Lusaka Stock Exchange actually issues out reports that gives that information, and that would be via the monthly reports, in which you can see the monthly foreign participation. So that report would give an indication on the turnover, the total volumes moved per company on the stock exchange, and also the overall. And there is a section in that report that highlights which percentage of that and quantity of that is foreign, and which quantity and percentage of that is domestic. Also, on the daily reports that the Lusair issues, they do indicate the volumes and turnover amounts that are foreign, and those that are local. So you would be able to decipher from that. But this question, I would like to think, comes mostly from students. We usually get such questions from students. And we're happy, as well as stockbrokers, to help you access that information, because this is more or less universal information on this capital market. So you can get in touch with us and we can find out more exactly what you need and give that information to you. The third question on where can I get the listing rules, you can get that directly from the Lusaka Stock Exchange. So please establish contact with them and they will be able to assist you. If I'm not mistaken, their email is trading@lusair, which is trading@luse.co.zm. So you can get in touch with Luce, particularly Lenganji, and she'll be able to help you with that.
Yeah, okay. Thank you for that, Maxine. And just to get more information on the Luce, we have them presenting right after this. So your questions directed for Luce will also be addressed there. Then we have another question saying, are corporate bonds also being traded on the secondary market? If so, where can I get the terms of the bonds?
Okay, the corporate bonds, as it stands now, this is not something that stockbrokers has been doing actively. Can count on my finger the number of bonds that we've actually traded in the years. This is something, however, that we are looking at, so that it becomes as active as equity trading. So as it stands now, if you are looking at trading that, you would need to either go to Stanbic or Stanchart. But with stockbrokers, it's still something that we're trying to get active.
Okay, and then Maxime, maybe you'd also want to touch on the equity market, major participants in Zambia. Estella would like to know who the major participants are and what would be good to have is, or she wants to say this information would be good to access.
Right. Okay. So basically, in terms of major participants, I mean, if we want to categorize it by number of trades, then we will talk about retail clients because the volumes may be small, but they do trade. So retail clients, in terms of the number of trades, are quite active. In terms of actual volumes and turnovers, we're looking more or less at foreign participation. And most foreigners have custodial accounts, which would fall under Stanbic or Stanchart, and they would, in that case, be called Stanbic nominees or Stanchart nominees. And so the majority of the participation is foreign-based. We also do have fund managers that participate in large volumes on the stock market. But out of the number of pension funds on the Zambian market, there are probably one or two that are the most active. In fact, pension funds are encouraged to participate more because most of them have the habit of buying and holding shares. Right, so in terms of you accessing that information, no, I mean that we currently don't have that, and I'd also be curious as to, you know, what you'd need the information for. But you can contact us directly to see how we can help you best.
Okay, thank you for that, Maxine. Ms. Mundia, would you like to clarify on the corporate bond trading? We saw some comments from Estella regarding corporate bonds and the regulation of the bonds where BOS is concerned as well.
Yeah, I think in terms of the, I'll just answer it generically because I can't quite remember the specifics that you raised. But so you can trade corporate bonds in the secondary market. The process would basically be the same, where you would need to go, same as for equities, where you would need to use a member of the stock exchange to access the bonds. So you would have to use a broker, but as Maxime has explained, it's probably not it's not a very active market. And basically, I think what we've also seen in most of the few corporate bonds that have listed on the LUCE is that they tend to be taken up by your institutional investors. You have very few retail investors who are participating in the corporate bonds. So again, there are some explanations, and there's been a lot of different views that were expressed, especially when we're coming up with a master plan. But maybe just to state that there are suggestions and interventions that have been proposed in the master plan in terms of how we deepen the secondary market. So the issues of the innovations that are in the sandbox are some of the solutions that we envision in terms of unlocking the secondary market. The whole idea or the whole essence is sometimes what you need is visibility, because what we tend to realize is that the capital markets products lack visibility in most cases. And so you don't even know that there's this corporate bond that you can invest in. So with digitizing, with these innovations where you can now trade using your phone, we will see more of these instruments being made known, for starters, to the investors. And now also the access being made very easy in the sense that you can now basically use your phones to access this. I mean, just yesterday, the Luce have partnered with MTN. All these are efforts that are pushing towards bringing these instruments to the fore, so that you as individuals, as retailers, individual investors, we know that these products actually are there for us to invest. In terms of the central bank, so with the central bank, some 2 years or so ago, we did give dispensation of sorts for them to assist the secondary market to be sort of vibrant. And they went on to invest in an electronic trading platform, which currently is just restricted to the entities that they regulate, who are the banks. But then it's a very progressive move in the sense that the banks are now able to trade on your behalf in these secondary bond markets that's been created using this platform, and they can now trade, buy and sell your bonds through that platform. The hope is that this platform becomes accessible by more players than just the banks. So our brokers, who traditionally are involved in this sort of business, we are looking forward to the platform opening up to them, so that through your brokers, you can also participate in this market that basically exists for us to invest in. And I hope that clarifies where I was coming from with the central bank. It's basically just with respect to their initiative that is really aimed at market development. So the investment in an electronic trading platform. Then back to ourselves as a regulator for every secondary market trading. We recently put in place a mechanism of reporting the secondary bond trades. The reason why we have put that in place is we want to know what is pertaining and how active this market is. For some number of years, we didn't have sight of what was happening in this market. So from 2019, we now have data, and it's become very clear that this definitely is a market that we ought to be positioning better going forward. So from our end as a commission, we are working towards bringing visibility into the secondary bond market trades, and we will implement a reporting, disclosure system where you can, as an investor, get onto our website and be able to see what was last traded and what is pertaining on that market in terms of what offers are available on the front of bonds. So similar to what you see when you go on the central bank website, you do see they put disclosures of how the primary market bond trades performed. Not quite to the extent that we are proposing in terms of the secondary market, in the sense of also showing you what's available for you to invest in. So it is a medium-term plan, but we do feel that even with just that step of disclosure, it provides information for somebody who wants to invest in the secondary markets, and it adds on to the resource that we want you to use in becoming this smart investor.
Thank you for that, Ms. Mundia. Raymond, I hope that answers your question concerning the bonds. So we have another question. We have a number of questions. We have another question from Chilombo. The custodian and the trustee, individuals or institutions, Maybe I can actually take that. So we have two custodians in the markets, Stanbic as well as Standard Chartered custodians, and the trustee is AMG Global. So they are institutions. Then we have another question. For the CIS, what is the percentage commissions? What are the percentage commissions to the fund managers? And is the return guaranteed, or like a shareholder, you share in the losses? Lee, I think this is for you under the CIS presentation you made. And maybe I can just ask, as we do the question and answer session, that we can turn on our cameras. Maxime, I'll ask you to stop sharing so that I can take the picture while we are discussing, while we're having this session.
Do we have anybody from the CIS fraternity that would like to respond to that?
Maybe I can respond, Stanley, to that question.
Okay.
Yeah, but in terms of the commissions that are charged as management fees on funds under management, there's currently a regulatory cap of a fund manager only being able to, charge a maximum of 5% on all the funds under management. However, different fund managers have got leverage to charge between obviously 1 to that 5% in terms of their management fees. The current average in terms of different portfolios obviously be about maybe say 2 to 4%. I don't think there are fund managers that have reached the cap yet in terms of charging management fees, but otherwise that's the average sort of pricing for different fees that fund managers are charging on the market. With respects to the risk on the portfolio, those are risks so depending on whether I got the question right, are the risks inherent on the portfolio or are they inherent on the fund manager's position? If it's things to do with risks on the portfolio with respect to securities that a fund manager is having on his portfolios, those are risks that are borne by the fund. And I think as part of the onboarding process, you'll find that each respective fund that you're investing in has got a requisite fact sheet that will tell you the requisite risks that are in that portfolio. Say, for instance, you're investing in a portfolio to do with equity, there'll always be that disclosure that prices of equities may move up or down. And some of those will translate into losses or translate into gains, and those will be borne by the fund. In the event that you are also investing in a fund that is very specific to bonds, again, the fund manager will make the requisite disclosures that there may be some inherent credit risks that may be borne on the portfolio. And once those arise, they may impact the valuation of the portfolio in totality. So again, it becomes very crucial for individual investors to be very wary in terms of just the mix of assets that an individual fund manager has, because that then informs you with respects to what exactly then you're participating in. So the various fund managers will have different sort of mandates with respects to the sort of risks that you're taking. And it's entirely up to you as an individual investor to assess the portfolio with respect to the disclosures that have been given, and you make your informed decision from that particular point on. According to the disclosure standards in terms of performance measurement of these particular portfolios, every fund manager is supposed to disclose, the fund performance of his portfolio, giving at least 3 years of performance. So that will give you a sense in terms of is a very good fund manager or not. The most critical thing that you as an individual investor have to take note of is when you get to buy into one of these funds, you are literally getting to, trust and buy that trust from the fund manager that is going to build that particular wealth for you over the period that you're going to be invested in. So it's always very critical that you get to see just how he has performed in the past to allow you to make that informed decision. Hope that answers the question that you had earlier, Stanley.
Yes, I think so. I hope that answers the question. That was Estella. Yeah, so we have another question here from Lichila. I'll take 2 questions for now. What happens if the company fails to pay back the bond? Does it mean you lose your money as well? And what is the minimum and maximum amount needed to invest? And then there's another question from Nancy saying, how vigilant is the SEC on mutual funds? Case in point is the loss that has been occasioned to pensioners who invested in Madison. To date, Madison has failed to pay the pensioners. What is the SEC comment? Ms. Mundia, would you like to take that?
So I had provided some responses on the platform. So maybe just reinforce. So on the bonds, yes. Remember, one of the things we're saying that is that there's a risk to investment, and that the risk is you could lose your investment. And so one of the things that we are now trying to emphasize is before you make an investment, you need to undertake a due diligence. If you are financially astute, you can do that on your own. But if not, you still are advised to go through an investment advisor or a broker to sort of do that due diligence for you. And what we mean by due diligence is basically do your homework in terms of assessing whether, first and foremost, this product that you want to invest in, whether it's a bond, it's a mutual fund, it's a share, whether it lines up with your financial objective. If it does, well and good, you tick that. But you need to also undertake some other checks on the front of the information that is disclosed pertaining to this instrument or potential investment destination. So looking in the financial statements, for example, is very critical. Reading those documents to really get an understanding of this entity that you want to entrust with your money. Now, I have to say this even for myself, that, you know, there are times when we see these documents like financial statements, and for most of us, they can be very bulky, difficult also to understand. But we are encouraging that however you get into the nitty-gritty of those documents, please try and do that. And also visit the other sources of information, the websites of these particular entities that have issued instruments. Look out for media information. The whole process of the capital markets is basically the way Leah explained it. It's as good as a Soweto market. And you've got different types of farmers that are bringing different types of products. And each farmer is vouching for their products. They are claiming, me, the way I grew my tomato, I actually didn't put any chemicals. So these tomatoes are organic. Yeah, my vegetables, they were grown under a center pivot or whatever else you want to pitch for your product. It's the same thing that's happening. So before you invest, before you buy these tomatoes, you sort of are examining first how it's looking, and then also listening to the person that is selling. And you're lucky if you're meeting the farmer themselves. So you're also listening to that whole story. Basically, that's the gear we want investors to get into, where you are an analyst in your own stead and you are analyzing these things before you invest in them. Even when you've invested in them, we don't want you to sit back. We want you to put pressure on the companies that you've invested in. You query. When you hear things in the media or you hear whatever, you raise them up with those institutions and attend the annual general meetings and engage in this analysis process, because that's basically what the capital markets entails. It provides a platform where there's this interaction, there's this intermediation, and it unfortunately can't be a process that is done for you by, say, a regulator. The regulator has got specific functions, they've got specific roles they play in the process, but so do we as the individual investors, and so do the advisors also have a role. The analysts, it's a field. I saw there was a question on the analysts and whether we could share the analysis we do here. So analysis itself, financial market analysis, is a career on its own. And in this country, it's a field that we are needing to sort of sharpen some more and have a lot more people participating there. We are talking to certain professional institutions like the Chartered Institute, CIS, Chartered Institute of Securities and Investment, to introduce content or courses that can help grow these skill sets in the country. The analysts are very important because for the ordinary investor, you also want to listen to what they are saying because they have the time, they have the skill sets to get into these details. So developing that area is fundamental for growing our capital markets, and there are initiatives in that space. In terms of what is minimum that you can invest in a bond, I don't think there's a minimum per se that has been set in terms of a regulation, but it's basically what makes business sense. And again, you need your investment advisors, you need your brokers to help you with the math, because they will show you if you invest 10,000, 100 kwacha, is it really going to make sense by the time you have to pay some of the fixed costs that are associated with your trade? So I think for me, it's basically a matter that has to be decided by you with the consultation of the experts from a commercial sense standpoint. Of course, with the central bank, they do have in the primary markets on that front, they will have set minimums that you can participate, that are required for you to participate. Coming to the issue of how vigilance is the second, I posted something there to say, you know, we have been on a journey of growing this institution, of also developing its capacity, but also that journey has also entailed developing the practitioners themselves, the fund managers. It's been a very, very sort of intense process of trying to raise the bar on the front of compliance. So many years, a few years back, what you found is we had very good legislations in place. Securities Act is one of your very fat documents or statutes that we have. And sadly, what we found is in the initial years is the focus was more on market development. And with that, there wasn't so much emphasis in terms of complying with the rules that are seated in the Securities Act. So in the past 5 or so years, the focus has been to raise awareness to our market practitioners, to bring to their attention some of the requirements from a compliance standpoint. With that also, we've had to also change the law to empower the commission. Previously, the commission couldn't take any action on, let's say, a fund manager who has erred, because the law only provided for one route or solution under the circumstances. You have to take them to court, and after that, the court has found them, then you can take necessary, punitive actions. So we had to change the law to allow the commission to have what you call administrative sanctions, so that you can carry out different levels of enforcement action on erring practitioners. So that process takes time, and we have gone through the process as a country. And hence why now you can see that like the banking sector, we're now also beginning to have what you call possessions, where the regulator literally steps in to try and resolve a matter. So in answering that question, we are doing a lot of things to make the commission vigilant. Being an effective regulator is very costly. And it demands, in a time like now, what we are also mindful of, it now demands that you have supervisory tools that enable you to scan the market, from a digital perspective that enables you to review reports, daily reports, monthly reports, using the help of ICT. So again, we are needing to invest very heavily as a commission in those sort of tools that will enable us to provide a service that is timely and for us to be able to catch up with any erring market practitioners in good time. So again, not to belabor the point, but all these matters are all sort of captured in this capital markets master plan. When you look through that document, and I know it's not out to the public as yet, but will soon be, when you look in that document, there is a area that is focusing on the regulator and the need for the regulator's funding model to be addressed so that this regulator can be capacitated to be able to undertake this vast mandate that it's been given. And as Elia shared, the mandate is two-pronged broadly. It's market supervision and also promoting market development, but you do need to invest in having an efficient regulator. And it's a journey, and the Ministry of Finance, our line ministry, is aware of what needs to happen for the Commission to really be capacitated.
Okay, thank you so much for that response, Ms. Mundia. In the interest of time, I know we have a number of questions, but in the interest of time, we've eaten into Dingase and Lina's presentation time. So I'll allow Lina to go first, then Dingase. Then we'll try and attend to the questions right before 1. So we'll end at 13.
Okay, and then maybe Sitali, I can place that for the other questions. If I have the answers, I'll try and post them. And I've tried to do that on a number of those questions.
Yes, yes,
Yeah.
I know you've posted quite a number in the chat. So what we'll do actually, we'll gather that chat information, put it into a question and answer session, which we'll send to all the participants in here.
Oh, excellent.
Yeah. So Lina, you can take us through what a trading day at the Luce looks like. I know the market is open. Lina, can you get me?
The downside of technology, isn't it?
I know she's here and she was actually asking for her time at the time we overshot. I know she can get us. Lina. Maybe as we wait for Lina, we can, Maxime, could you attend to, I think there was another question on the brokers. One was asking if they could have a number of more broker accounts or multiple brokers. They can be with multiple brokers and how they can go about opening an account and getting advice on which company to invest in. Maxine? Okay, I think Maxime has left us, maybe. Lina, you can go ahead.
Hear me now?
Yes, we can get you.
Wonderful. Okay.
Just start your presentation.
Yes, I will.
Slide 4.
There we go.
Okay.
Okay, so good afternoon, everybody. As earlier introduced, my name is Lina Lungu. I am in the Business Development Department at the Luce. And today we'll be going through trading at the Luce. I know both my speakers have preempted quite a lot of the information I was going to talk about, but that's good, so we can focus on the trading side of it. I'm glad also that stockbrokers got to speak. Stockbrokers Zambia through Maxime got to speak, and I'm also happy that SEC through Leah also got to speak on some of the things we do as the Luce. So you can see that the market is quite an important player within the capital market. So the Securities Exchange is quite an important player So this is where your shares and your bonds are traded on the secondary market. So before we begin, we need to, so a securities exchange or a stock market or a stock exchange, those words can be used interchangeably, is a licensed and structured and transparent market where issuers raise relatively cheaper long-term capital. Okay, so I know that the other speakers have talked about it a bit, is that the capital markets is a place where these sort of instruments, long-term instruments are traded, okay? So you won't find any short-term instruments traded in the capital markets. So buyers and sellers on the LUSA interact, that's where your trading happens, and they trade in these long-term securities. So you've got companies which issue either equity, which are shares, or bonds, right? On the market, and then you have investors who interact and trade these same securities on the secondary market. Okay, so that's the function, or that's what a securities exchange is. So some of the objectives then of the LUSE are listed above. I've highlighted the top two because these are quite critical. Number one is the empowerment of citizens through the wider ownership of shares or even of other securities. And then two, resource mobilization, again, a source of relatively cheaper long-term finance for companies or corporates or institutions that are issuing these instruments. So these are the top two. I mean, without empowering citizens or owners, I mean, people want to buy these shares, there's no point. If we can't empower or the Zambian to buy shares, and we're only empowering external investors, that doesn't help us win as a LUSE. Neither, it also doesn't help if we can't be a platform where this resource mobilization, where funds come together from their investors to help corporates, institutions to raise capital. So those are the two key objectives of the Lusaka Securities Exchange. Apart from that, there's also the encouragement of local and foreign investment. The encouraging of local investment, I touched on it a bit there with empowering the citizens through the wider ownership of shares or other securities. And then there's also the aspect of foreign investment. It's good that we also encourage people to participate on our market who may not be Zambian. I'll give an example also of empowering citizens at Zafico's IPO. Which happened in 2020. The idea is that Zafico went and said on IPO level, so us issuing these securities to the public for the first time, we will only issue these securities to Zambian citizens or Zambian companies. Those are the only ones who bought only Zambian companies and Zambian citizens bought these shares. So that was a big plus, and that was really promoting and assisting and also empowering citizens to own shares in a Zambian company such as Zafico. So that's a good example of citizen empowerment through shares. Then there's another objective is for facilitating the divestiture of government's interest in parastatals. Obviously, government can then channel, instead of looking for capital to continue sustaining these businesses, they can then channel, once a company lists on the market, they can then channel the same funds they would have used to pump into the company to other government objectives or things that they need to accomplish as government. So it makes it lightens, so to say, the burden, or it lightens the weight of government's role in some of our statals. Then lastly, we provide an efficient, fair, orderly, and transparent market for secondary trading. All those four sort of attributes, efficiency, fairness, orderliness, and transparency, are very key in operating the market. The time in which trades happens have to be efficient. We have to be fair. Every shareholder should be treated as a shareholder. We have to be orderly in the way we do things. That's why the use of brokers in our market is crucial for us. And also the market has to be transparent. Everybody must have investors or people who'd like to invest must have the necessary information to make a proper investment decision, which is why I think, as Maxime alluded to in the previous presentation, it's important for the investor to go out there and do their research as well. That's what makes a smart investor, as the theme is for this investor week. A smart investor is one who goes out there and ensures that the information is there, it's readily available, going to get that information and say, okay, how do I sort this information? If LUSE gives information, if a broker gives information, you can go to investment advisors, or such as your broker or any other licensed investment advisor, to say, okay, so what does this information mean? How can I go about this information, processing this information for my investment goals or requirements? So those are some of the things the LUSE provides, that sort of environment for trading of securities. So quickly, we have just the departments at LUSE. For your information's sake, there's legal and compliance, there's finance, there's operations and market data, there's business development, and then there's administration under the LUSE. So before you invest, you'd obviously need to know which companies are listed. My colleagues from SEC did a good job in highlighting those companies. In fact, they use logos. I've just put it in the order of the year of listing. So I'm sure some of you are familiar with them or familiar with all of them. So at the top, the first listing was Lafarge in '95, before it was called Chilanga Cement. So we've grown, we're now 22 listed companies on the LUSE, and the last listing was last year, which was Zafico in 2020. So these are the listed entities, because in order for you to invest in shares, for example, you need to know which companies are listed, which companies you can buy shares from. So those are the listed entities. Today, I'll focus primarily on the shares side. I won't touch much on the bonds, either government or corporate bonds, simply because there has been a lot of interest on the equity side, on the share side, and also because of the trading app, people have asked quite a number of questions. So we hope to see how we can look at those through the presentation. So we're going to go through the trading board, and I hope you can see. You may have to zoom in a little bit if you're using your phone, but on your computer, I think you are able to see its full screen. This is how the trading board looks like. And this is, right now it's all on zero. This is how it looks like on a daily basis. So the one thing that we see here is that we've got AEL, AELZ, from going from top to bottom, all your listed companies until Zambia Sugar there at the bottom. I'm so sorry, my internet on my laptop is gone. Just a moment while I get it back. Just a moment.
Lina, how are you doing?
I'm still trying to connect. I don't know why it's not connecting on my
Your
on
laptop.
my laptop. Yes.
Okay.
Can it
So
be shared? Maybe we can beam it from our end.
Yeah, that's what I want to do. I want to share it with you.
All right, thanks.
So while we wait for maybe Lina's presentation, I just thought I highlight one of the ways in which you can be a smart investor. I would like to actually commend the audience that we have here, because this is one of the ways that you can be a smart investor, by seeking information. So by virtue of you just being here, it shows that you are willing to be smart investors. And I'd like to commend each and every one of us for being here. And okay, Lina is back.
Yes. Can you hear me?
Yes, we can. Thank you.
Okay. Sorry about that interruption. I don't know what just happened with the connection on my laptop, but we're back. So as I was saying with the trading board, we start, the securities are listed in alphabetical order from top to bottom. And then you've got the status, the volume, the bid offer, the quantity, and the market cap. So I'll speak to these as we go through the presentation. So the security refers to the financial instrument which is available for trading. So in the case of shares, the security is recognized by its ticker symbol. So it's an abbreviation which is used to identify publicly traded shares, okay? So I think a lot of it is pretty much about understanding which one is which. I listed the companies earlier. So, and I put those, I put them according to the year they were listed. In this case, they're put in alphabetical order. So it may take a little bit of experience sometimes when you look at the ticker symbol and understanding which one is which. So for example, the first one is AELZ, which is AEL Zambia, formerly known as African Explosives Limited Zambia. So ATEL, Airtel, Zambia, Bata is, well, simply Bata, and the list goes on. So these are the securities. Sometimes it just takes a little bit of familiarity, and maybe I will add the ticker symbol together with the security. I'll make sure I add a slide for that then I can share it all with you so that you can know which ticker symbol refers to which security. Okay, so there are 22 listed companies on the exchange at the moment, as I've emphasized earlier. From then on the trading board, you have the status. So it pretty much just defines what trading session or what phase or trading state the security is in, okay? So it's pretty common for the status of all the securities to be on the same sort of status. So for example, in this session, then the next one is open, and it's open, and then it's closed, okay? So there are rare times where a particular security would breach certain trading rules. For example, if there is a particular security which is trading in a day, trades below or above the threshold which is placed within the market. then it will be halted for that particular security to maintain market integrity. For example, if a share is at 2 kwacha per share price, and then the share price drops to 1 kwacha, I said it was 2 kwacha, yeah, and then drops to 1 kwacha 70 ngwe, then it drops to 1 kwacha 50 ngwe, 1 kwacha 10 ngwe, like within a very short space of time within the market or within that day, there's a particular threshold which is defined in the rules, which the security cannot breach, either above or below, to keep market integrity. Because imagine if it kept going that way, it would get to zero. Okay, so the idea is the market has that authority in line with the trading rules to hold trading in that particular stock for the day. It also helps the market sort of recalibrate and take a breather, for lack of a better term, before trading begins the next day, and to just maintain that market integrity. So that is the status of the market, or the status of certain securities in the market. We then have the various trading sessions, like highlighted earlier. There's the pre-opening, there's the auction, there's the continuous trading, and then there's the closing. So these sessions, the pre-open, you've got from 10 to 11 a.m. in the morning. So during this session, orders can be entered, they can be deleted, and they can be amended. And these usually, when you go to your broker, this is the time they put in the orders into the market. They can enter, you can delete, because the trading session has not yet begun. It's the pre-open, okay? So no trading takes place within this session. In other words, there is no buyer and seller which will match at this particular time. There will be no trade taking place. There are simply orders in the market which are being placed in the market, okay? So once that's done, there comes what is called now the auction phase. Now you see the time there. Usually the auction phase is called auction from 11 to 14. Essentially, that's what's happening. But for the sake of differentiation between auction and the continuous phase, we have given auction the 1 minute, the 11 to 11:01 period. So during this period, the opening price of a security is calculated by the ATS, which is the automated trading system. That's the system on which the trades occur, okay? The opening price at which the greatest number of securities could be matched. So as remember, the orders are coming into the system is sort of analyzing, okay, which ones, what order can I put them in? What is the greatest number of securities at a certain price can be matched, okay? So selling on the buy side and the sell side, what is the greatest that can be matched at this particular point? If it is different from what the previous closing price, for example, then the opening price is likely to change for the next day, okay? So that auction period, that 1 minute, it's 1 minute because the system does it and it's quite quick in doing it and analyzing that. It puts those in order and then it sees which ones can be matched before giving the opening price for this trading day, a particular trading day, okay? So once that is done, you now get into the continuous phase, into the continuous auction. Once that is done, opening prices, the market opens, there's a continuous phase. In other words, trading continues throughout the day. So as orders come in, the system sees if it can match with any other buy or sell orders in the market, and it's continuous until 2 o'clock in the afternoon. At 2 o'clock, the session now closes, the market closes. And this is after the continuous period, of course. So during this session, the ATS now also computes the closing price. Depending on how trading went during the day, it will then compute the closing price. If there's been no change in terms of pricing, it will be at zero. There will be no change. The change will be at zero, and it will maintain the day's closing, the day's price, market price. If there was a change, either up or down, it will close depending on the price to which it has closed at. So the closing price again is the volume weighted average price. In other words, similar to what it did in the auction, the greatest number of securities, it's by weight. So depending if there are few, for example, if there are few trades which have traded at a different market price, it's more likely that the closing price may not change. But if there's quite a number of if there are quite a number of trades in the market that trade at a particular price, it's likely that the closing price will then be affected or differ from the opening price that day. We then have volume. Volume refers to the number of shares that have traded, okay, and that's on the trading board. A volume for anything just means the number of securities. If I have I've bought 10 shares, my volume of my shares are 10, okay, or if I want to buy 70 shares, the volume there is 70. But in this case, on the trading board, it refers to the number of shares that have traded. So they've traded in the market. Buyers and seller orders match. Okay. So in this case, if we take a look, we've got Lafarge there. When the market closed, 20,044 shares were traded. So that's the number of shares that were traded in Lafarge. Airtel also had 83, and Zambia Sugar had 19,803. So that's what volume refers to on the trading board. Now you've got bids, okay, which is the buy side of the trade. Okay, so there's bid quantity and there's bid price. So the bid quantity is the number of shares that are willing to be bought. Okay, so when you go in with a buy order, you put the number of shares that you like to buy or you're willing to buy. The bid price is the amount of money a buyer is willing to pay for that security. On the LUSE, if, for example, the reference price or the market price, in this case, let's take AEL Zambia on the top, the bid price rather is at 20 kwacha, and then the quantity of the shares willing to be bought are 57 into the market. On the offer side, on the sell side, we have got the same thing: offer quantity and offer price. So offer quantity, the number of shares willing to be sold, okay? And the offer price is the amount of money a seller is willing to sell a particular security for, okay? So you've got your sell side. So you've got your buy and your sell. These images were taken on the same day. So if you see for a moment, AEL has got a buy, if you go back to the buy, of 57 shares, which are up at a price of 20 kwacha, right? On the sell side, we see there is 0, okay? So these are some of the dynamics which you have to, when you sit down with yourself and your broker, you'd say, okay, on this side, there's nobody who's willing to sell. There's no offer on this side. On the buy side, there's somebody who wants to buy, okay? So these are some of the market dynamics you have to sit and look at to say, okay, where will I best then, where is there an opportunity for me to trade, okay? And your broker will help you also through this process if you may not understand it fully or you're not as investment savvy. So then we've got, lastly, the one I'd like to look at is market cap or market capitalization. So essentially, very simply put, it's the number of shares that a company has issued multiplied by the current share price. So it's heavily, the market cap is the heavy determinant of a market cap is the share price. So if the share price changes, the market cap changes. Also, depending on how this happens once in a while as well, where the number of shares in issue can change. For example, if a company, there's a rights issue, right? And a company is issuing more shares, there's also a case where the market cap can change because there'll be an increase in shares in the market multiplied by the current share price. So that's the market cap. So you can, if you see on the trading board, what is shown there is the market cap, but you can find how many shares a company has in issue by dividing the market cap by the share price. For example, in this case, at this particular time, 1,600 shares in issue. So the market cap divided by its share price, current share price. And CEC had 1,625,597 shares in issue. Again, same thing, the market cap divided by its share price, okay? So the market cap on the trading board is rounded off to the nearest kwachas. We don't put ingwes. So we now come to how these particular securities match, okay? So price priority is the first one. It's quite simple. It's almost like in a market. When you are in a market and you are trying to buy, for example, bananas or something like that, the seller is saying, no, I'll sell them at 5 kwacha. You also are not going to say, okay, no, sell them for me at 4 kwacha, maybe in a very informal setting, or sell it to me at 1 kwacha, okay? There has to be a match. In order for there to be an agreement between buyer and seller, they have to agree on the same price, right? So when it comes to the matching criteria of the ATS, the highest bid, so the highest buy for a particular security and the lowest offer, okay, the lowest sell, have precedence over the other orders. So, for example, if a security, somebody wants to, the market price for a certain security is at 20 kwacha, and there are bids which are for 20 kwacha, 19 kwacha, or 25 kwacha, the highest bid has precedence, okay? Because the buyer is willing to pay more for that particular security. On the other side, the sell side, the offers are take precedence. So the seller wants to sell at a lower price. So obviously on the buy side, people want to buy at a lower price, right? And on the selling side, sellers want to sell at a higher price. So it makes sense that these have precedence over other orders. So orders are ranked by that price sequence in the order book. And then time priority, I see I'm running out of time here. Let me try and be a bit quick. Orders are at the same price, and the earliest one takes priorities. So if you push in an order at the same price as another investor, for example, if it's a buy order, you both put it in at 20 kwacha. The person who enters it first in the system gets priority. So it's even, the system goes as far to calculate that to the millisecond. So first come, first served if the prices are the same. So a quick example of this is that if client A is selling 1,000 shares in Lafarge at 14 kwacha 15 ngwe, and client B wants to buy 500 shares of the same shares at 14 kwacha 15 ngwe. If we note there the price is the same, the number of shares differ, but the price is the same, right? So if these are the orders in the market, it will match, right? So the trade will match because they're at the same price. However, remember, one has 1,000 shares. Who has 1,000 shares? The client who is selling. And the one who wants to buy will buy 500. So all the buy order 500 shares will go into the system, will trade. And then there'll be a remaining 500 on the seller's side. In other words, he sold 500, but there's still a 500 which has not yet been sold. So there'll be a balance of 500 on the ATS on the offer side. So that's how that happens. So these trade details are automatically transferred to the CSD, the Central Shares Depository, or the Central Securities Depository, for clearing and thereafter settlements. Maxime talked about the T+3, which happens on the LUSA. So quickly then, just showing you what now the open market looks like. You can see the status of the market is open. There's volumes, there's the bids, there's the offers on the market. You can see if there are any changes in the market, the times the last trade happened, the highs and lows, and then the market cap and what it opened at that day. So these are all the details. As you read through it, you can carefully analyze, okay, which market can I invest in, or which shares can I buy? This is when the market closed, as you can see, slightly different from when it was open. Now you can see the volumes at the end of the day of what has traded. So 3 companies traded on this particular day, and there are still offers and bids which are still pending in the market, which can be, if the orders remain, be taken over to the next day. I am finished with my presentation. So if there are any questions in the chat, I'm more than happy to take them. Sitali?
Thank you, Lina, for that wonderful presentation. So we do have a number of questions for you, actually. So one of them from Sunil says, how many days in a year do we witness zero trades? Because we do have some days when we have no trades on the exchange. How many days would you say we experience zero trades?
Well, Sunil, I can't give the exact number because it varies. It varies by year, and the Luce trading team may have the stats, more stats on that. But the idea is, yes, there are times where there are no trades on the market. Now, remember what I mentioned. It also takes yourself as an investor, and also maybe in speaking with your broker, to see where the opportunities are. Your broker will help you to say, okay, there are these shares on the market. And even if you go on the app, you see that there are these shares on the market, and this is what people want to buy it for, or this is what people want to sell it for. There's the order book. Okay, so it's up to you as well to just analyze to see where maybe you can set yourself as a buyer or seller to match on particular trades. But it does happen. But those stats, I think, will be best handled by the trading desk.
Okay. Speaking of the app, we actually have two questions, one from Davy and the other from Margaret. So Davy's question is twofold. Is the trading app, My Luce app, owned by the exchange? If yes, does that mean investors are accessing the exchange directly, not through a broker? And secondly, what initiatives are being worked on to increase liquidity on the local stock market? Share prices hardly move, making them unattractive for the risk. So that's from Davy.
Okay.
Then maybe
okay, go ahead, Sitali.
Let me just add another one on the app saying, when orders are rejected on the My Luce app and funds are reverted to the wallet, how can one send them back to their MTN mobile money account?
Okay, I'll start with the first question. So that has to do with the price changes and what was the first part again?
It says, is the app owned by the exchange? And if yes, does that mean investors are accessing the market directly, not through the broker?
Okay.
And then
so two things.
Yeah.
Okay, so two things there. Yes, the app is owned by the exchange. So one of the things that we have done is that regardless of whether you're on the app or if you go to a broker in person, there's always going to be the broker. So when you trade on the application, the broker is still there. You still have to select a broker before you can trade. Okay, so the broker is not gone. The broker still maintains its position as a market intermediary, whether on the app or in person. So that's one thing. With regards to, again, the prices on the market, I think that's one of the things that we look at as the Luce, of course, but it again goes back to the investor, those who are investing on the market. The Luce, unfortunately, doesn't change the prices. That is from a market perspective. Those who are investing, those who are selling, those who are participants are the ones who change the prices, right? So due to the forces of supply and demand in the market, that's what happens. That's what transpires on the market naturally. So on our end, our point is to make sure that we encourage people to invest, hence the application, the app. We want people to have access to the market, whether they're in Lusaka, whether they're on the Copper Belt, whichever province you are in Zambia, that you can access the market. So that's one side of it. So investor education is also another thing which helps in this regard, where we explain these things to you, like today. We explained how the trading board works and how trading happens, what is it, price priority and the like. So you get a bit more understanding as to how that functions, because that affects how you then trade on the market. So I think that's important from that perspective. So I would say that it's up to us, whether we are retail investors or institutional investors, to make sure that we are participating on the market and actively participating. The Luce is always in contact with other institutional investors as well, other partners, to see how can we make sure that this market is active. How can we encourage institutional investors who are typically buy and hold to find ways of interacting or trading on the market. Mutumboi talked about the Capital Markets Master Plan. That is what we're doing as a capital markets to encourage more and more people to actively participate on the market. Then the second question was with regards to the app and when the order is rejected.
The
Yes,
funds
when the order is
reverting back to
rejected,
your wallet.
Yep. So with that, there is something that we are working on. We realize that there is something in the system that we need to work on with regards to getting the money back to your mobile money account when the funds when the order doesn't go through. Because obviously, if the order doesn't go through, then you should still be able to trade in other securities and not your money not to be held in the wallet. That's something that we are working on very quickly so that can be done. So at once a trade doesn't happen, or once an order is rejected or doesn't go through in the system, your wallet can be topped up. But that is very well noted. We are aware of it and we are working on it.
Okay, thank you for that, Lena. Devi and Margaret, I hope that answers your question. We have another question from a reporter, because we have the media in our presence. So we have a reporter from Money FM asking, how is the participation of the SMEs on the stock market?
Okay, that's a good question. At the LUSE, we have what is called the Alternative Market Board, the ALT-M. And I know this is a very long discussion, probably for another day. So I'm more than happy for them to email me on the same. One key thing is that there's that board which was created for the SMEs. It was created in 2015. And to date, no SME has listed on that market because the idea is for you to raise capital as an SME on that market. It's the market is tailor-made for them as SMEs. There are a number of issues which I won't belabor on, but I think it's a learning curve for SMEs. Typically, SMEs are not used to the capital raising aspect of raising money on the exchange, right? It's something which big corporates, large corporates have done for a long time, traditional large corporates. So there are a number of things, for example, which the exchange requires, and we're not requiring it to the extent that we do for the large corporates on the main tier, but there still has to be that, for example, corporate governance aspect. There has to be a board in place. You need to make sure this and that is in order because shareholders are coming to, invest in your business. So you want that, that again comes to investor protection. Which the SEC, the LUSE hold very highly in that the investor has to be protected. So there are certain things which a company must do in order to raise capital on the exchange. Though again, I repeat that it's not to the same sort of, what's the word I'm looking for? It's not to the same effect as the people on the main board or the corporates that are on the main board. It's lessened, but the same rules sort of apply. Yeah, it's more relaxed. Right, so that we can cater for the SMEs. There are quite a lot of discussions we've had with partners, whether it's the brokers, whether it's PACRA, whether it's SEC themselves. And we have discussed that if a company is willing to come to the market, we are more than willing to waive certain fees completely, if need be. And I think SEC can attest to that, brokers can attest to that. So that's one thing which we still need to have a very long discussion with SMEs, but I think we are going to get there. Definitely going to get there. We see there's a lot more interest from SMEs now looking at that form of financing.
Okay, thank you for that, Lena. I have another question. I think we have another question on the app, but in the interest of time, I will ask Lena to just put your email in the chat, so that we can attend to these questions afterwards, because we only have, I think, about under 15 minutes in which Dingase needs to make her presentation on fraud and scams.
Okay, sorry. Yes, that's not a problem, Sitali. I'll put my email address in the chat. Hopefully everybody can see it. Thank you so much, Dingase. Sitali, sorry.
All right, no problem. Dingase, you may go ahead with your presentation. You have just about 10 minutes in which to do so. We can see your screen, but we can't hear you.
Okay, thank you very much, Stali. And good afternoon, everyone. Thank you very much for joining us and for holding up for this long. I have personally also enjoyed the presentations and the contents that we have shared, answering to what the World Investor Week is all about. I'll be very quick looking at the time left and knowing that I'm in between now and lunchtime. And it's already a good thing that most of the things that I would like to share have been attended to in what the previous presenters have already presented. But very quickly, essentially, I'm going to be talking about the World Investor Week, frauds and scams. The structure of my presentation is to talk about the structure of the Zambian financial markets, and I'll give you the reason why, because basically you need to appreciate that as a consumer of financial products, you may want, or you may already be quite diversified, but you find that some of the products that you have actually taken up are being overseen by other jurisdictions. Sorry, not other regulators in the capital markets of Zambia. Understanding capital markets, I will not dwell on it because it has been ably attended to already. We talk about why we must invest, and that is essentially what we try to encourage. But then as you invest, what are the red flags, and that will encompass the frauds and scams. And then I will just briefly talk about where you can report the scams or the complaints that you may come across as you invest. So the structure of the Zambian financial sector is structured on three pillars: the money markets that are being overseen by the Bank of Zambia, sometimes referred to as the central bank. And we also have the capital markets, which is the Securities and Exchange Commission, where we are speaking from. The Pensions and Insurance Authority, overlooking the insurance and pensions. And we are in the capital markets, and this is the Securities and Exchange Commission overseeing it. And like I mentioned, and I'm sure we don't have new people who have joined us, we have really been educated on what the capital markets are all about how they bring together the issuers and the investors and ensure that they intermediate the raising of funds and also the aspect of investing in the market. Your investment options in the capital markets, again, just a revision, is the shares, bonds, collective investment scheme. Other products were also mentioned by Ms. Mundia and the speakers. And of course, depending on what objectives you have to invest, as you speak to the investment advisors, they will show you the array of the different products that are available to you, and depending on your investment objectives. What is investing? Of course, we know that when we invest, we're trying to put, we're trying to put money into use and expecting a profit out of that. And clearly, we are being encouraged to invest, and that is the whole purpose of financial education, that we are trying to encourage the public and the investing community, current and potential, to undertake even more, to be diversified. And this is supported by the National Strategy on Financial Education objective, which is to empower Zambians with improved knowledge, understanding, and skills, and motivation, and to have the confidence to help them to secure positive financial outcomes for themselves and their families. In other words, we see that an investing community is one that becomes financially better off. The World Investor Week, which we are commemorating, and why we have brought together this virtual exhibition to basically showcase what the capital markets are offering, is a public awareness campaign aimed at enhancing investor education and protection. The campaign is led by the IOSCO and implemented by securities regulators worldwide. And in this market, the SEC is the regulator, and so we are the ones that are spearheading this commemoration. The theme, as we have already heard earlier in the opening remarks, is a smart investor in the capital market. So a smart investor capital market. And this is placing emphasis on the investment basics, which have been spoken to. The messaging is comprising of 4 topical thematic areas. And this is fraud and scams prevention, sustainable finance, investing basics and initial coin offerings, digital assets, and investing online. It is emphasized that as the IOSCO SAT, these are the areas that are most being either offered in terms of financial products and also trending as needy areas. Like when you look at sustainable finance, this is basically what every conversation in the board is taking route to, because we have to preserve the climate, the environment, and the effects of it coming through climatic changes. So you find that there's a call to everyone participating in this cause. Why invest? This forms part of the campaign material that you may be seeing already on our social media platforms. Of course, we invest for various reasons, and some of it, as we can see, a family there, is to plan for and invest according to your future needs. So we encourage people to do that. You also are encouraged to plan for life's unexpected challenges and uncertain times by investing. So the Be a Smart Investor Be a Smart Investor theme under the World Investor Week commemorations is obviously for the obvious reason that one must have that appetite to invest, while at the same time being capable of mitigating the risks that are associated with the investments, with the investing as it comes. We see that fraud and scams are really coming aggressively, and most of it is coming through the internet. Quite pervasive to regulation. Find that it's moving at a very fast rate, sometimes very difficult even for regulators to catch up with. But what we realize, and this is an agreed position, is that an investor makes the first frontline protection. So it's better that investors know about these scams and how they appear, in what forms in which they come, so that they can best protect themselves and their income or the money that they want to invest. So who is a smart investor? The smart investor is one who verifies that an investment professional is licensed, conducts research on a product before investing. Very important. You don't just get it as it comes, but you first take time to understand what product is being offered before you can invest, what costs are there. And I'm very happy, I was very happy listening in and seeing the comments coming through. We even had our fund managers answer to some of the questions concerning the costs, because this is very important aspect, or can form a big impact on the monies that we invest. So we heard about how the brokerage fees are calculated, and also about how the monies put in CIS are affected by the fees that one has to pay. A smart investor further needs to understand that risk exists in all investments, which we have talked about, and there's no hiding about it. But it's important to know to what extent that kind of product can be affected by some of the risks that are there. If a smart investor avoids get rich quick and can't lose schemes, recognizes the power of compound interest, and that is obviously being very smart. If one can get to add their interest to the principal, reinvest, and go on like that. The money will grow faster than if it were not. A smart investor recognizes the importance of diversification. This was discussed, even if it's in one asset class, there are various ways in which the fund managers or the brokers can assist you to ensure that you are diversified. Plans for and invest according to his or her future needs and goals, and recognizes the benefits of long-term, regular, and diversified investment. We cannot overemphasize on these things, but we do hope that as they keep resounding, they form part of our investment behaviors. The issue of a smart investor and online investments, we would like that a smart investor understands the risks that are associated with initial coin offerings and crypto assets in general, and is careful in deciding whether to invest in these products. A smart investor does not forget about the importance of undertaking due diligence, recognizes the red flag warning signs of online investment fraud, and never invest based solely on a celebrity endorsement, because sometimes these celebrities don't even know that they are on certain products. They're so far away, or they are being stolen, in other words, and being stamped on a certain product. And before anybody can realize it, it's gone viral. Yeah. A smart investor knows that most legitimate firms do not allow their customers to use credit cards as they invest. Talking to fraud, I would like now to just give some advice or some emphasis on what red flags can look like, so that investors become aware and try to be very alert as they undertake their investments. So when you see the following, you must be very cautious and decide whether to invest or not. And most likely, when it is like this, you must perhaps backtrack and reevaluate the offering. So a high investment returns with little or no risk. When you're offered a product which has such character, it is it's a warning sign that it might not be a good investment, or it might be fraudulent or a scam. So every investment carries some degree of risk, and investments yielding such returns typically involve more risk. Number two, you look at overly consistent returns. Some investments that tend to go up and down over time. Most investments will do that. And if it's not, for example, a government bond, which has such a characteristics, of course, that's why we advise that you consult an investment advisor. You might want to question such a product. You might want to be suspicious, because what we are saying is that the prices may rise or fall depending on the situation that is happening in the investment environment. Secretive and/or complex strategies and fee structures. It is a good rule of thumb to avoid investments you don't understand and which you can't get complete information. So as you ask your questions, and if you can't be answered to, you might want to take it with a pinch of salt. Issues with paperwork. Be skeptical of excuses regarding why you can't review information about the investments in writing. Always read and carefully consider an investment's prospectus or disclosure statement before investing. Difficulty receiving payments. Be suspicious if you don't receive a payment or have difficulty cashing out of an investment. Fraudulent schemes, organizers sometimes encourage participants to roll over promised payments by offering higher investment returns. I think this is very common, where you you are simply advised to roll over and we shall even give you a higher return. That must be taken with suspicion. So if you're approached by someone offering investment products, remember to do your part by first asking to see their Securities and Exchange Commission investment advisors license. In this market, it's the SEC that licenses investment advisors. As they do that, they take care to see that those who are providing such services are fit and proper, and they are monitored on a consistent basis. So where do you report your complaint? Like I said earlier, you may report to the Securities and Exchange Commission. You may report to the Bank of Zambia. You may report to the police. They do have an overarching mandate over crime because frauds and scams are crime. And the police have the advantage of being everywhere in the country. Whereas the SEC might not have an office in far-flung places of the country, but the police will surely get in touch with the SEC, the boss or the PIN, where there is need. In case that is a very specialized crime, they know we do have agreements or MOUs with them where we work together on such issues of financial crime. We also have the CCPC. Of course, they also have a mandate over consumer protection, and they'll be happy to receive those complaints should you have. And if they need to get in touch with either the SEC, the PIA, and the board, will do that just as the police would do. And that is the end of my presentation. I'd like to thank you very much for participating. And if there are any questions, I'll be glad to take the questions. Thank you.
Thank you so much, Dinase, for that presentation on fraud and scams. And as you've seen, that's the highlight of our week as a smart investor. That's the information that you need to know, to ask the right questions, to check if somebody is licensed, to verify your investments, to verify your statements, to ask for statements from your brokers, and so on. So without taking so much of your time, we've already gone into your lunch time. I'd like to just thank everybody for joining us and invite you to join us again tomorrow. We have an interesting discussion, same place, same time. So tomorrow's program, we have investments basics that will be done by an investment advisor this time. So you'll be able to get the perspective of an investment advisor. And then we're also going to talk about investing online and initial coin offerings. I'm sure you've heard a lot about cryptocurrencies and all these digital assets. So you're going to get a presentation on that and have an opportunity to have a discussion around that. And then we're also going to talk to the Capital Markets Tribunal tomorrow. They're going to join us and just explain to us what their role and services are in the market. So please do join us again tomorrow at the same time, same place. Thank you so much. Have a good day.
Okay.